Dividends suck. There, I said it. Some of you may have the expectation that when you invest in a stock, you can leave your money there for many years, then earn dividends that can cover your expenses. That is, unfortunately, unrealistic. Unless you have tons of cash to spare. By that, I mean millions in cash. Realistically, especially as a small account investor, dividends are, for the lack of a better word, pathetic. As an example, my recent dividends on IVV and Procter& Gamble are less than $4. After accounting for forex, that can only buy me a decent meal. Of course, this is just only one of the reasons on why I hate dividends. Watch all the way to the end of the video to know more about why dividends suck and why it matters to you. Let's move back to some basics. By investing in stocks, there are two ways you can make money. Either dividends or capital gains. Dividends are money that companies pay out to their shareholders as a reward for their investment. The money comes from the profits that the company made in the past and is usually paid in cash. Capital gains are earnings that investors earn through price increases higher than their initial purchase price. For example, if you buy a stock at $100 and it increases to $110, that $10 price difference represents a capital gain. However, if it drops down to $90 from $100, that $10 represents a capital loss. What makes dividends suck is the amount of return and timing. Dividends are usually paid after a while. Usually these are paid once per quarter, or it can sometimes be once per half year or even once per year. That is if the company pays dividends in the first place. Companies can choose not to pay dividends even if they are profitable. Compare this with capital gains and losses that move every single day when the stock market opens, which also tend to move more than your dividends. Let's have a look at the returns of IVV and P&G in the past few years to have a better idea. Looking at the returns from IVV from 2018 up to 31st of October 2022, you'll notice that for every year, the dividends are always less than capital gains. And in the year 2018 and this year, IVV has made capital losses. Although it pays dividends, but the dividends are not able to cover the capital loss. From 2019 to 2021, you'll notice that dividends are tiny compared to the total capital gains. Same goes to Procter & Gamble. In 2018 and 2022, the company has made capital losses. But surprisingly for the case of P&G, dividends in 2018 can cover the capital loss. But in 2022 up to October, dividends are not able to cover the capital loss. Similarly, from 2019 to 2021, dividends were lower than capital gains. Dividends are not just very low, they are also subject to what's called a withholding tax if you are not a tax resident in that particular country. For example, me, as a non-US tax resident, I am subject to 30% withholding tax on my dividends from the US. How it works is if I earn a dividend of $1, my broker will pay 30 cents to the US government first, then they will only pay the remaining 70 cents into my brokerage account. I'm already earning so low on dividends. It's even lower with the withholding tax. Since dividends suck, does that mean we shouldn't want them in the first place? Well, not really. If given a choice between having dividends or capital gains? Why not both? I would say dividends are just a small bonus that you get for your investment. Never, and I mean never, invest in a stock just because it pays good dividends or it has high dividend yields. Why? If you ask me, here's the thing. If a company pays good dividends, that means they have less cash that they can use to finance their operations or even grow their business. If a company has high dividend yields, that could be a red flag that their stock prices are falling for some reasons. If you buy a company with a high dividend yield, likely you will be catching a falling knife that will drop even further, and in that case, your dividends might not be able to cover your capital losses. So yeah, dividends suck because they are low and they are slow. That rhymes. Since you are now aware of this, I hope this helps you with your investing decisions. Thanks for watching. If you have learned something valuable from this video and want to learn more about money and investment, please like this video and subscribe to this channel. Do also check out this video to find out about more problems when investing in a small account. See you!